So this is a video series that I'm creating on how to read financial statements of a company that you want to acquire. So whenever we go to acquire a company, its whole profile is in its financial statements. And a lot of the people are very familiar with buying houses, and that's the type of asset that most people are familiar with buying. And when you go to buy a house, you look at the location, you look at the structure, you look at the size, you look at square feet, square meter, and all of these dynamics, area, neighborhood, traffic around that area, and how the rents are going to go up or down, maybe macroeconomic trends. But when you go to buy a company, you look at their income statement, you look at their balance sheet, you look at their financials, the financial profile of that company. And usually this financial profile is in an audited financial statements. Some companies have an auditor, some companies do not have an auditor. And an auditor is someone who is an external party who looks at the company, and it's an independent entity, and it analyzes the cash inflows and outflows and how much money the company is making, and provides a statement, a report. And that's audited financials. I'm sure you are familiar with. But if you were in my position when I was starting out, I did not know what audited financials were. So I'm just explaining for those of you who don't know, because I did not know. So how to read audited financial statements is a very critical skill, very crucial skill if you want to get into the business of buying other companies, because that's the report card. If you want to associate with good children in your class, you have to know how did they perform in academics, right? You have to look at the report card. Similarly, if you want to partner up with companies, and if you want to be successful and you want to partner up with successful companies and buy successful companies, you have to know how to read its financial statements and how do you make sense of this. And at the beginning of my journey, I did not understand what audited financials were. I understood what tax returns were, but I didn't understand what audited financial statements were. And I understood what a bank statement is, but again, the audited financial statements is a very crucial document that you would at some point have to get very familiar with. And the sooner you become friends with it, the better. Because when I was looking at these financials with my board members, I felt sick to my stomach because it contained terms that I did not understand. Things like EBITDA or amortization or depreciation. I understood what revenue was, or at least I thought I understood it, and I understood what profit is. But you've got gross profit, you've got net profit, you've got EBITDA, and all these three things are completely different. Then you've got reported revenues, unreported revenues, recognized revenues, non-recognized revenues. I mean, you've got so many variables that a financial expert can advise you on. And this video series is not meant for you to compensate for not having financial advisor. You need to have financial advisor, especially if you're planning to get into the business of buying other companies. You still need a financial advisor, but how do you interact with that financial advisor? How do you ask questions? How do you present the information to the banks, to your board members? How do you interact with seller? If you don't even understand the fundamental terms in an audited financial statement, you would not be able to communicate well, and you would not be able to understand, comprehend, and it's going to be like a foreign language, kind of like you're speaking in Chinese or Japanese or in a language that you may not understand. It was that kind of an experience that I would get these high-profile executives together, and they would start talking to each other and they would understand each other, but I would be pretty lost, and I was the one making contact with the company. So if they ask me questions, I need to know, I need to give them data. Even if they have to advise me on something, I need to have the data, and accordingly, I have to interact with the seller. And because of not having understanding of these financial terms, whenever I would enter into the company, the seller would tell me, what kind of information do you need? And I would ask them for information like audited financials and tax returns, but I didn't even know what I'm asking for. I didn't know how to study it. It all looked like Chinese to me, honestly. So this is a video series that can hopefully clarify some of these terms and help you build a relationship with these terms and help you understand and comprehend what these terms mean and how you can use these terms to become financially intelligent and also understand your own financial statements, right? And also the financial statements of someone else. And with that, you will have a very healthy understanding of how this whole system of money works. Because what I understood was revenue and profit. That was my understanding. I didn't understand assets. I didn't understand liabilities. I didn't understand equities. I didn't understand, EBITDA, amortization, net profit, gross profit, direct expenses, indirect expenses. And frankly, I felt pretty bored with these terms. But when you have big ambitions, when you want to make a lot of money, you have to sooner or later get familiar with these terms. And actually, how I got excited about learning these terms is because I was introduced to a study. Someone told me about this study that they did on doctors who did not understand this. And I can tell you with a hand on my heart that I have met multi-millionaire doctors, extremely successful, that did not understand how to read their own company's financial statements. I mean, they had no idea what there is. Some of them didn't even have audited financials. They just knew how to receive cash and manage this cash. But they had no idea how the whole system of these numbers worked and these financial terms, how to structure all of this. Because once you understand how to structure all of this, your understanding becomes so superior that you could use it in many, many ways. You could run your business so much more efficiently if you understood what these are. And especially when we are going to buy these companies, we have to understand. Because the owner is running the show, he understands ins and outs. But we, coming from outside, the only way for us to have some understanding of the company is to read the financial statements. Because the owner may tell you something that's accurate or may hide information from you. And the financial statements will reveal the truth. And when you start to cross-verify financial statements with bank statements and tax returns and some other documents, you will have a pretty healthy picture about what the business is doing. And having that healthy picture gets you to be strongly related with the reality. So it's very important, it's extremely crucial that you invest some time in learning how to read financial statements. And one of the books that I can recommend is called Financial Intelligence. And this is for someone who doesn't know anything about finance, and they have explained each term clearly in simple language for you to understand. Now, there are very sophisticated methods of analyzing financial institutions, financial statements, and it's a very sophisticated thing, and it has got too many variables, and there are many ways of looking at it. The same financial statement. I mean, Warren Buffett looks at it completely differently. Trump looks at it completely differently. And then you've got the tax code, which is also very complex. So we're not going to get into too much of a complexity. We're going to talk about the fundamentals, the fundamental terms, so that you can understand what's happening and you can see if the business is in a healthy position or not. So that's the purpose, is a very fundamental understanding of accounting and finance. But I just want you to keep in mind that this is not a substitute for having a financial advisor. You need a financial advisor, you need a legal advisor, and you need an operations guy. Because business is not just finance and accounting, it's also operations, it's also legality and such. And it's also accounting and finance, which is two different aspects of a business. Accounting and finance are different. And I used to think it's the same. So for someone who understands finance, you might be thinking, why is he dumbing down so much? I understand this. But a lot of the people don't, because this information is not given in schools or colleges. Unless you actually took a course in finance, it's unlikely you would understand it. As I mentioned, a lot of the multimillionaire doctors did not know how to read these financial statements. So coming back to the study, so I was introduced to this to the study that the doctors, they did a study on a group of doctors where they trained them in financial terms. Like they did a seminar, I think 1-day workshop, where they just talked about revenue, expenses, indirect expenses, direct expenses, and terms that they didn't understand. And by the end of the seminar, the doctors found themselves sleeping and dozing off. And like they weren't paying much attention. But they were still in the room and they understood something. And they found out that I think 70% of them increased their business by a huge margin. Even though they were not paying full attention, but the terms were going in their head and they were able to see a different picture of their business and take better decisions over time, and their business grew. So that's the purpose of this training. That's the purpose of this video series, is to give you a complete picture of how a business looks like on these pieces of paper, which is very different than real estate. And I will close by giving you an example of someone being financially unsophisticated. I was starting out being financially unsophisticated, and then I caught up, and then I became financially sophisticated, and then I was talking to this seller, and because he didn't understand numbers, he thought, and he wanted to increase the value of the business. So he thought if he spends money to increase the size of the clinic, physical size of his clinic, the valuation of the business is going to go up. That's what he really thought. And in mergers and acquisitions, the physical size of the business has got little or nothing to do with the valuation, especially if that facility is rented. Because you're not buying the facility because it's rented, you're buying the business, you're buying the income. And that's a shift that's very important to understand, that you're not buying something like a physical object. You're buying a service-based business where you're essentially buying a network of relationships. So the size of the business has got nothing to do with valuation in the context of acquiring service-based businesses. If you're acquiring assets and you're acquiring the real estate also in the business, then yes, you can look at the size. But in most cases, we are not buying the real estate. We are just buying the business, the license, the ownership of the business, and the network of the relationships. And it's important to understand that, because he thought he wanted more money for his business. So he was like, Prithvi, why don't you come back in a year's time? I said, what are you going to do in a year? He says, I'm going to increase the size of the business. I says, how are you going to increase the size of the business? He says, I'm expanding the building. I said, that's going to reduce the value of the business. And he said, how? I said, because you'd be spending money and it'll reflect in your income statement that your expenses will rise if you do this expansion. And you may not see the income until after 3 or 5 years. So your size is becoming bigger, but your financial position is becoming smaller. and your company may go down in value, not up in value, because we value the company based on the income that it's producing. So if you expand the facility and your expenses goes up, and you hire more employees and your expenses go up, your income will start to go down, and your value of your company is going to be based on the income. And I can tell you, he did not understand what I said to him, because he was exposed to doing investments in real estate. And in real estate, you value the company based on its physical size. And in mergers and acquisitions, particularly in the service industries like healthcare, clinics, which is a leased facility, it's a rented facility, the main value is the customers and the doctors that are doing the service there. That's the value. It's not the building. Location could be also a value, but ultimately it's still the relationships between doctor and the patient. And that was something that was very difficult for him to understand, because he was a very visual person. And there are so many biases and so much financial unsophistication in the world that you would be surprised as to such basic concepts people don't understand. But again, it wasn't his job to understand. He was a doctor, he was a surgeon, but he didn't think that he would be selling his company one day. And he should have gotten some advice from an investment banker, which he could have afforded, or an accountant. But he had no idea what he was doing or talking about. So if he didn't do that expansion, and if he used that money maybe in marketing, he would have increased the business and the value. But because he didn't understand how this accounting and finance works, he put the money in a direction which actually reduces the value of his company. So these are very simple things that if he just read this one book, or if he was watching this series, he would know exactly where to put the money. Okay. So again, this is not a financial advice. I'm not a professional financial advisor. I'm an entrepreneur. You need a financial advisor. Even though you're watching this series, again, I've mentioned this is not a substitute, but we're going to cover the fundamental aspects of accounting. And I'll talk to you soon.